Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, if you look at the markets, we are far better off than what we saw in the morning trade. We're back above 24,800 odd mark. There's a 0.5% uptick that we actually see on the markets right now. And of course, a lot of sectors that had already started to positively contribute to the markets, they've also increased. The volatility is lower than the peak that we saw in the morning trade. You can see the broader markets now participating as well. Among the key sectors, I think all the sectors are now up into the green, led by a lot of moves that are being seen on real estate that's recovering from yesterday's losses. You're also seeing oil and gas higher in trade. There's also a pharma index that's also doing well. Metals are doing well as well, shining bright at this point in time. So it's a broad-based move that we are seeing on the positive side. Look at India Wix, that's down by 4%, and that's at 11.55, and that's also led to some recovery in the markets as well. Broader markets, both mid and small caps, are now up into the green. Small caps nearly 1% higher, so that's outperforming the benchmarks as well, and that's leading to the recovery that we're seeing on the markets right now. Let me quickly look at what's happening on the Nifty stock. You have Jio Financial that's higher by almost 4% now. L&T, Reliance Industries, Asian Paints post earnings that have just trickled in has also shot up in trade. Eicher Motors and Bharti Airtel are the other top movers right now. Let me quickly welcome our guest on board. We are now joined by Mr. Sudip Bandyopadhyay. He's the Group Chairman of Inditrade Capital and he's joining in to share his views on the markets. Good afternoon, sir. Good to have you with us as always. I want to begin by first understanding on the markets per se. 4 weeks of negative move is what we've already seen. You know, it's again a lot of factors confluencing together and impacting the sentiments on the D Street. What are you watching out for right now? And why do you think the markets are unable to get out of this range, sir?
Well, I think corporate results was the main culprit, I would say. And, unfortunately, the results were not anything great. Add to that the uncertainty around the US-India trade deal. I think combination of all that was keeping the market under significant pressure. As things stand today, I'll be watching out in the evening for multiple news flow coming from US, particularly US jobs data, US GDP data, and the big IT companies, technology companies there, Alphabet, then Apple, and Facebook, Meta, basically, they all will be announcing their results today, and the markets will be very, very keenly watching. And I'm sure there will be some impact of the same in both in US markets as well as markets worldwide. As far as scenario in India is concerned, I think today there is a general positive sentiment around corporate results. I think the Asian Paints results were pretty good, much better than what the market was expecting. Amber Enterprises results were pretty good. Paradeep Phosphates came with a good set of numbers. Deepak Fertilizers came with good set of numbers. So I think today is a lucky day for the market. A lot of good news is coming, and EU-US trade deal has created positive sentiment in the European markets. So that's also in some ways influencing us. But I would say that we have to be a little cautious. India-US trade deal is still not done. There are a lot of uncertainties surrounding it. And today is a data-heavy day from US markets. Let's wait and watch what happens.
Absolutely. Add to the list Varun Beverages, that's now up 4.5% post results. Right now, we are also looking at Power Industries, that's up 11.5%, 9,666 now coming in. Happiest Mind Technologies is also higher in trade. Many of these names reacting to positive results. Gabriel India, that's been so much in focus over the last 2 months, that's also hovering higher, and you can actually see some enthusiasm coming in from that. But Sudip sir, you mentioned Asian Paints, and that's the most critical stock that we should be discussing. Of course, the consolidated PAT has fallen by 6% year on year. The revenue has dropped about marginal. But when we compare it from the last couple of quarters, like you mentioned, where the results were dismal and the stock price was absolutely faltering, there was also a huge amount of concern about the competition rising, large conglomerates entering the same space, that keeping sentiments low for Asian Paints. Finally, do you think the worst is now kind of behind for Asian Paints? And do you think the company is now stepping on the right side when it comes to results and growing and protecting its market share too?
Well, a couple of things, Sakshi, I'll mention here. One is, I think the volume growth of about close to 4%, 3.9%
Yeah.
was definitely unexpected. The market was expecting at best around 2% growth, and they actually doubled it. So that was a sweet, music to the ears of the market. That clearly shows that things are gathering momentum in the overall industry, paint industry, and Asian Paint has stopped probably losing market share. We'll have to see how things pan out going forward. But as things stand today, the numbers were definitely good. Also, what was good was the commentary. I think it was very positive commentary instead of the wishy-washy or an uncertain kind of a view. The
Yeah.
commentary which came was very positive. So I think these two things gives us some confidence that probably Asian Paints has found the right recipe for kind of holding onto their fort against the intense competition, particularly from the large conglomerates.
So, would you be confident for your clients to now start building on fresh positions on Asian Paints after this result, or do you think still there needs to be some more quarterly earnings that could give you that confidence to, jump onto the bandwagon again?
Well, I think I'll be still cautious, Sakshi, honestly, and I don't think I will go and try and buy Asian Paints. I think the entire industry is going through a lot of consolidation. Earlier it was the Birla Opus. Now we have JSW, which has gone ahead and acquired a large existing player. And I'm sure their ambition is to scale up. So competition is going to be there, and very heavy competition. Of course, Asian Paint is the market leader, so everybody tries to hit the market leader. So let's see. This quarter results were very good. Management commentary was positive, but would I go and buy? Probably no.
Okay, got that. So still a little bit cautious as far as going ahead and buying immediately post the results is concerned for Asian Paints. Let's see how this really pans out. Today is the first day of reaction post earnings as well. We'll see how it follows too. Let's come to some of the other aspects. Of course, earnings we will continue to discuss from IT, from banking space with you. But recently, what made news over the weekend and yesterday was TCS layoffs. And I wanted to take a view from you on how are you reading the sentiments for sector-wide, the kind of move that we are seeing. IT has been a laggard this quarter after the earnings. There haven't been any substantial moves either on the large or the mid caps post earnings. That was not the case in the last quarter. Last quarter, we'd actually seen all the stocks rallying post the earnings as well. This time around, when the largest IT firm comes out and says we are going to undertake the biggest ever layoff in our history, and a multiple of factors that is something that they've cited, and at the same time, NASSCOM, which is an industry body, comes out and says that they also expect this to continue sector-wide, more workforce rationalization to follow for the sector. How would you really look at it, sir? And how should an average retail investor read into these sentiments?
Well, definitely there is pressure. US continues to be the largest market for Indian IT conglomerates like TCS. 50% plus their earnings come from US, and there is enough and more uncertainty in US, which is leading to new projects getting shelved, existing projects being slowed down, and things like that. So and no US large corporate is willing to take a decision yet because of this trade uncertainty and tariff related confusion. So under the circumstances, I think Indian IT companies are under pressure. So the bench which they have created to cater to extra work, I think they are probably trying to reduce the bench strength to ensure that the margins don't suffer. And that's pretty evident because the wage hikes are getting stalled. Bench strength is being let go. So yes, they're trying to protect the margin. They're trying to build around, make it a little bit leaner organization to withstand this the season of confusion, I would say. Not a crisis, but a confusion, definitely. That's pretty much what is happening. I think all the IT companies, particularly the large IT companies, are looking at things like this for some time, and that is what is happening. Some of the small and mid-tier IT companies who are doing niche work may not face the same dilemma, and we'll have to wait and watch for action of multiple other IT companies on this front before we can conclusively decide that yes, there is a definite large downsizing which is happening.
Absolutely. So, on a sector-wide position, what will you take, sir, amidst all these earnings that have come in and the kind of global scenario that's still, being seen as an overhang of uncertainty?
Well, I think I will wait and watch. I don't think I will rush to buy IT. There is absolutely no need because there is enough and more uncertainty. Some of the IT companies, particularly Wipro, was very positive in their commentary, and they may be having specific reasons for that. But the general atmosphere is of uncertainty, and that is pretty much getting reflected in their commentary about the future and their actions as well as TCS has demonstrated. So at this stage, there is no need to rush to buy IT companies.
No need to rush to buy IT companies. And you did mention tariff uncertainty, sir. You still, you're right when you say that there is still so much of confusion that takes place because every day we're now hearing from Donald Trump say that, baseline tariff that could inch higher to 15 to 20% for those countries that have not yet struck a deal. India, is one of those countries as well. We do not have any interim deal or any indication of what's coming in. And August 1 deadline is staring at us again. We're also looking at his pharma statements that are flying away that they're going to come up with big pharma news. That's also keeping the sentiments, on the edge as far as the pharma stocks are concerned. And he's also talking about, threatening Russia and their partners too, that in case you continue the collaboration with Russia, if you're a partner with Russia, and if Russia does not do a ceasefire with Ukraine, you are going to be facing additional 100% tariffs. So, is it just to create a lot of scare across the global markets, these statements? Will they again die down? We have seen a taco trade pan out earlier, sir. So how would you look at it now?
Well, to interpret or understand Mr. Trump's actions is beyond me. So I won't even attempt doing that. But yes, there is enough and more confusion and uncertainty around. I don't know who gains effectively. Does US gain anything out of this entire exercise? I'm not sure. But I think there is a strong possibility that everybody will lose because of this uncertainty, because of this chaos which has been created, and global GDP growth will slow down, which will impact pretty much every economy. So a lot of uncertainty, definitely, and definitely not sure who gains. I'll repeat, interpreting Mr. Trump's actions is next to impossible.
Okay. Let me ask you on, the FOMC bit as well, because this week we are again looking forward to what will be the reaction of the Fed. Enough and more statements have also gone on to threaten the US Fed to start cutting the rates and start cutting them now. There were initial statements that indicated that probably Jerome Powell could be fired. Then there could be statements that, okay, he won't be fired, but he has to take a decision that is going to be good for the economy, and that is to rate cut. How would you look at what will come in the current policy, and how much of an impact will the markets really see of that?
Well, I don't think US Fed will go ahead and start cutting rates based on what Mr. Trump says or doesn't say. I think they will go by data, and they have been doing that. It's a very matured organization which is being run by a bunch of matured people. So they will take a conscious call based on data. And today is a very important day, as I was alluding to earlier. US GDP numbers come out, jobs data comes out. So US Fed will have all these inputs before they take a call. I think the view Fed has been taking is that tariff-related uncertainty will lead to creeping up of inflation in US, and that's the congenial atmosphere for rate cuts. Let's see what the jobs data says. Let's see what the GDP numbers say. And I think US Fed will take appropriate action based on data. They will not go by what Mr. Trump says or doesn't say.
Okay. So help us understand a broad view as well. Despite all this uncertainty, the US markets are continuing to climb at record high levels. They are actually moving forward. Yet at the same time, markets like India are struggling. We always question whether we are, our valuations are higher, whether we are at an overbought zone. All of these questions come in, and yet at the same time, foreign flows have completely evaded India over the last 1.5 months again. How would you really look at why FIIs are continuing to be on the sell side on India, and what will it take for FIIs to come back?
Well, I think the problem in India is completely different. Leave aside the trade-related uncertainty and what confusion it is creating on certain sectors of the economy, particularly IT we discussed. Indian corporate results were not as what it should have been to justify the kind of valuation at which the stocks are quoting. So there is a significant gap between the valuation at which they are trading and the fundamentals. So fundamentals and valuation gap is not getting bridged. And that's really leading to Indian markets being termed as expensive and avoidable, by the foreign investors. They have other options, and China for one is definitely much more valuation wise attractive from a foreign investor's point of view. They are also looking at US markets, and based on what Mr. Trump is doing or not doing, there are opportunities which are emerging in US, and some of them are using those opportunities to make money. I'm not sure this is a long-term strategy, but in the short term, they are trying to avoid India because it's an expensive market with earnings not matching expectations.
Okay. Coming back to the earnings then, sir, on the banking earnings, what has been your key reading there? There seems to be some kind of an indication and a distinction. Even when we talk about private banks, for instance, the larger ones, HDFC, ICICI, they seem to have weathered the storm when it comes to the MFI pressure. But say, for instance, a Kotak, their commentary was very cautious. Bank had a muted one as well. How would you really be now looking at these players within the private sector banks? Would you stay with the sector leaders, or do you think these dips are actually giving you an opportunity to build on wealth or positions on Kotak and Axis and below, sir?
Well, I think the reality is unsecured loans are under pressure. Whether it's MFI, microfinance, or otherwise, the entire unsecured basket is under significant pressure. And that stems from multiple factors, including a bit of pressure on the economy, rural, urban, bit of a slowdown. I think all this is contributing to significant pressure on unsecured loans, and that is getting reflected in the asset quality for most of the banks. Whether you talk about IDFC First Bank, IndusInd Bank, Kotak Bank, and pretty much all the other small finance banks and other banks as well. Now, as far as the larger banks are concerned, if you look at a bank like ICICI, in their overall portfolio context, microfinance book is completely insignificant. So is the case in HDFC Bank. So they are relatively kind of protected from this entire microfinance fiasco, or for that matter, unsecured loans fiasco. They are better off at this stage. And I think if somebody has to play, it's better to play through those companies. The reading as far as how long this pressure on unsecured book will continue is different. And, people are talking about the entire current fiscal, there will be pressure. Some of them are talking about up to Q2, the pressure will be there. After that, it ease out. So it's a little too early to take a call. That's my view. So at this stage, the smaller banks probably is best avoided. If somebody has to play, let them go to buy SBI, let them go buy ICICI, HDFC, and things like that.
Okay, fair point. How did you find the new age tech companies in the earnings there, sir? The likes of Eternal that came out with earnings and that pushed up the sentiments yet again for the entire space. Swiggy also was riding big on Blinkit's numbers, overtaking Zomato's numbers this time around. How are you looking at these new age tech companies? Are they really coming off? Car trade tech was in focus last week again. Delivery, all of these companies. Nykaa, do you think there is a wave of now finally improvement even beyond a Zomato?
Well, definitely. I think Zomato numbers, Eternal numbers were pretty good. And I think they have done the right thing. They're focused on, increasing top line revenue and sacrificing margin to an extent. And that was probably the right strategy, and that's market liked it, and that's why the market gives thumbs up to Eternal's earnings. let's see what kind of numbers Swiggy comes up with. We
Yes.
also do like delivery. I think, that was a business which was expected to do well, didn't do well for a pretty long time, but I think finally they are getting their act together and things are improving at delivery. So yes, delivery does look good. Policy Bazaar for that matter, PB
Yeah.
FinTech rather. I think that's another good business. They're doing the right things. In between that, unrelated diversification on, the hospital segment created some panic amongst the investors, but that was pretty well clarified, and they're back on growth track. So again, that's also a good business. I'm a little skeptical on Nykaa at current valuation. I mean, it's a good business, it's growing, but competition is intensifying in that segment, and valuation is not cheap. So I'll be a little careful on Nykaa.
Okay, fair point. Let me also shift focus to capital markets. NSE has just reported its numbers. We are seeing a 14% year-on-year surge in its consolidated net profit that's coming at 2,924 crores for Q1. Revenue for the quarter have fallen by 11% year-on-year to 4,032 crores. Although the revenue from operations have increased 7% sequentially, driven by the rise in the transaction charges. Operating EBITDA has risen by just 1% year-on-year to 3,130 crores. Sequentially, it has grown by 12%. Margins have expanded to 78%, up from 74% in the previous quarter, and the total expenditure has also declined. The upcoming NSE IPO is already leading to the kind of rush that's happening in the unlisted market. What we're given to understand is that the pre-IPO gold rush is starting. 1 lakh retail investors have bought the shares of NSE just in the last 3 months. So the probably more and more investors want to invest in the unlisted market even before the IPO comes in. We had CDSL results also a couple of days back as well. NSDL IPO will hit the street just about tomorrow, day after. How will you really look at the capital markets and the opportunities there, sir?
Well, fundamentally, these are good businesses. There's no doubt about it from a long-term perspective. They are market infrastructure companies, and with the kind of economy, the kind of financialization of saving which we are witnessing now, I think they are bound to do well in the long run. I'm positive on NSDL IPO. The CDSL numbers, of course, this quarter of CDSL was little below expectations, but fundamentally, I think an NSDL, I understand the valuation at which they are coming also is a much lower than the multiple
Yeah.
CDSL currently attracts in the market. So I think that's a good strategy, and I'm sure this IPO will do well. And as a company also, though much smaller, I think the number of customer wise and all that, it's 1/4 the size of CDSL. But number of in terms of AUM, because they cater to the large institutions, significantly higher than CDSL. It's two sets of the market. The custodial business. CDSL is pure play retail, predominantly retail. Here, NSDL is institutional. So yes, I think it's worthwhile looking at NSDL from an investor's point of view. As far as NSC is concerned, of course, it's going to be a great stock to own. One has to see at what kind of valuation it does come to the market and take a call based on that. As I said, they are market infrastructure institutions, and fundamentally, from a long-term perspective, they will definitely do well.
Okay, fair point. One more global aspect that I wanted to discuss before we let you go, sir, and we've discussed a lot of earnings too, is the impact of the recent UK-India, FTA that we actually signed, and how are you looking at that from the broad economy point of view, the sectors that you believe will be at the winning end in India too? We've also been seeing some reactions, say, in auto space, Tata Motors that was, showing us some fresh upticks there. How does one really understand what's in the offing? Because it's going to be a long, impact that we are going to see. It's not just going to come in one day and go away one day. So how should one really play this theme?
This is definitely a good development, Sakshi. I think, as you rightly said, this does help Indian industry and, of course, UK industry also to an extent in the long run. It will play out over a period of time. Certain industries which will straight away start benefiting rather, is the textile industry, which does significant exports to UK, the leather goods industry, which again does significant exports to UK, and so on and so forth. So some of the other talked about sectors are liquor and and other kind of drinks. There, I think over a period of time, the benefit will flow in. Also, we'll have to see what kind of benefit the defense sector can derive out of this FTA. Professional firms will benefit. But as far as market is concerned, I think textile, leather goods, I think these are the sectors where I will focus on and see how the benefit percolates.
Okay, fair point. Well, thank you so much, Mr. Bandyopadhyay, then for speaking to us and sharing such wonderful insights that you always have to share with our viewers of Business Today Television. I hope you have a great time, and I'll see you soon on the other edition of Business Today too. Thank you. All right, viewers, we'll start wrapping up the trade now. 3 minutes to go before we end the session. And finally, we are seeing signs of green. So about 3 days of losses, and we're snapping those 3 days of losses now with a 0.6% of an uptick on the Nifty. 24,834 is what we are at, 153 points higher in trade. What's really keeping the sentiments the kind of higher is Jio Finance, Reliance Industries. Look at the strong momentum there. 2.2% higher for Reliance. Jio Finance up 4.5% to 5% up. L&T ahead of earnings is up by 2.2%. Asian Paints post earnings is up by about 2% as well. You're also looking at Eicher Motors, Adani Ports also hovering higher in trade. Whereas on the downside, still have minute losses that are coming in on, say, an Axis Bank, a TCS, HDFC and SBI Life from the insurance basket, ITC, Titan. They're ones that are slightly lagging in trade. Let me also, share with you what's happening with the broader markets. Both the mid and the small caps are actually higher. Look at small caps up by over 1%. Now that's the one that's outperforming. Wellspun Corp, Tata Chemicals, Affle, Birla Soft, Go Digit Insurance. These are the stocks that are upwards of 5 to 7% kind of moves that we are seeing there. On the lower end, when we look at Zen Technologies, that's declined 5% lower. Remember, it's been on a kind of a weakening spree that we are getting in on Zen Technologies. IEX is down another 3%. Remember, brokerage houses continue to pencil in lower targets. Today in the morning, we had one brokerage house penciling in a 99 kind of a target on IEX. Signature Global, we're looking at 5-Star Business Finance, Credit Access, Grameen. All of these sectors, stocks are also down within the small cap basket. What's happening within the Nifty 500? Again, 0.75% of an uptick in the broadest index. The stocks that are higher, Apart Industries, I told you, it's now 12.5% higher post earnings. Surprise that has come in. Netweb Technologies is also higher by 7.5%. Remember, in the run-up to the earnings, this one was seeing some weakness. Tata Chemicals, there is a brokerage house update that's come in with targets also higher by about 1100 odd levels coming in for Tata Chemicals. That's really pushed the stock higher by about 7% in trade. Wellspun Corp, Affle India, PNC Infra, these are the ones that are also supporting the sentiments as far as the Nifty 500 basket of stocks are doing. Let me just help you understand what's exactly happening on the sectoral front. Today, on the move are sectors like autos, 1% higher, financial services 0.4% up, FMCG higher by about just about marginal uptick that can be seen. Media stocks also higher by 0.7%, metals up by 1%, pharma up by 1.4%. That's the key sector to watch. PSU banks, private banks also higher, real estate recovering, consumer durables, oil and gas, as well as financial services. These are the ones that are holding higher in trade. Now, let's also look at some of the other key areas that we can track for all our viewers again. From the Nifty Bank, which is up 10% higher, the stocks that are hovering up are PNB, AU Small Finance Bank, Bank of Baroda, HDFC Bank, and Kotak Mahindra Bank. Let me quickly look at the key contributors on the Nifty today. Reliance has contributed 44 points on the positive side. HDFC Bank has contributed 23 points. L&T, Bharti Airtel, Jio Finance. These are all the top contributors as far as the moves in the markets are concerned. And there you have it. It's the Final tick, 3:30 p.m. For the markets. We have ended 458 points higher on the Sensex. Midcaps up by 465 points. The Nifty ending about 0.6% in trade at 24,821, 140 points higher in trade. All right, viewers, we'll wrap it up on that note, but do stay tuned as beyond the market hours, coverage will continue from the world of business and finance on Business Today Television. Stay tuned. Welcome. You're watching Business Today Television. I'm Sakshi Batra. I'm going to